at Barometer Capital Management to take stock of where we are. Nice to see you.
Good to
where
see
are
you.
we, David? Not that anybody knows the answer to that, but what do you think?
Look, there's a ton of things that influence share prices, and news is one of them, right? And we've had lots of news from the Trump administration through the political situation here in Canada. But the fact is there are structural changes that have been taking place for months and months and months prior to a lot of this news, and they aren't changing. So we're in a world where inflation-oriented assets have been outperforming. Okay, so for all the talk of cutting spending in the U.S. and balancing the budget, the bond market is not responding. Long-term rates have been ticking higher. And things that do well in an inflationary environment have been outperforming. So, for instance, commodities have been way outperforming utilities, right? An inflation asset versus disinflation. Commodities versus bonds, an inflation asset versus a disinflationary asset. And there's certain sectors that benefit in an inflationary environment, like financial services, and that's been the leading sector in the market. And global stocks tend to do well when inflation is higher because they lean more toward the sectors that benefit. All these things have continued all the way through over the last 3 months while we've been facing all this news, including the Canadian stock market outperforming the U.S. stock market.
So that's really interesting because you made the point that the market reacts to news, but the interpretation of that news can be a short-term and a long-term interpretation. Let me give you an example.
Yeah.
Everybody's trying to figure out what happens with this big government cost-cutting initiative in the United States, but I keep hearing from all the pundits that is coming ahead of an expected big tax cut for the wealthiest. I even heard from a guest today who said that might be something that is well received from the stock market. So is it conceivable that as we continue to watch the Doge experiment and then eventually likely see an update on tax cuts in the US, that maybe the stock market responds well to that, but longer term, that still gets us into that fiscal headache for the United States that feeds into some of these assets that are benefiting already, maybe benefiting over the long term?
Yeah, it's just interesting. There's a lot of things that impact the market, and this news is one of them. But I do think it's really interesting that over the last year now, global stocks are outperforming the U.S. stock market, really across the board. Now, the big piece of that is global markets have very little technology, and technology has been underperforming since June.
Right.
Right? Europe is like low single digit. But financials are the biggest part of those markets. And financials are performing really, really well. So in general, industries and companies that generate lots of cash flow and don't need financing are performing well. Companies that are able to grow their dividends are performing well. And so there's some filters that we're using to try and target those areas.
Okay. Well, you always come to the table with a lot of actionable ideas, so let's dive into them. I'm going to stay macro first because you were just talking about Europe, and like we heard from a strategist earlier who was saying when we get Liberation Day, so to speak, next week, April 2nd, that could rattle Europe to a certain extent in terms of the tariff story. European stocks have done well. You've highlighted financials, though, in Europe. That I would assume is a group that you think sort of navigates as well as any could in Europe.
So it doesn't matter where you look in the world. China, Latin America, Europe, Canada, US, financials are doing well everywhere in the world because there's a big differential between short-term rates and long-term rates, and the power is in the hands of the lender. They are the lender. They can make money lending, borrowing short, lending long. And so when you look at European financials, they went through the mill just like U.S. financials did after 2007-8. And only in the last year have they started to make new highs, but they're like half as expensive as U.S. financials. And there's some great banks like Santander that really is well diversified around the world and in a lot of growth markets and is providing really good dividend growth.
And then I saw on your list a Canadian play with exposure to the financial world, but that's not the only exposure they have, and they are global in Power Corp.
Yeah, that's right. So we've talked about a lot of financials over the year, and we have almost 30% of our assets in financial services. Power Corp's a great diversified way to be involved in insurance and involved in the asset management business and insured in wealth management, and with some global exposure. It's got a great yield, which a lot of people are looking for, just about a 5% yield, and it should grow sort of mid to high single digits going forward. So if you've got a rising cost of living, a rising stream of income is pretty attractive. And we are focused on those types of investments.
Okay, let's keep powering through here. In energy, Cheniere, LNG was on your list as well. I was just cycling through some of the Bloomberg data, which I love, which shows you which stocks are the most loved on Wall Street. And this is one of them. There's more than 90% of the analysts who cover this company who are bullish on it. Why do you like it?
Look, there's a huge global theme in liquefied natural gas infrastructure. We've got lots of cheap gas in North America. The rest of the world pays much higher prices. We've figured out how to build that chain to get the gas from North America to the rest of the world, and Cheniere is right in the middle of that. But it's benefiting a lot of the gas producers as well that are likely to benefit from higher global prices.
And then for the Canadian market overall this year, the love affair with gold has been benefiting the materials sector. It's one of the reasons the TSX is positive. I saw Franco-Nevada on your list as well. I know they're not just a metals streamer, but
right.
but you like them because
for the investor who thinks gold is scary, and I understand that. It went a long time not doing well. And as they say, a mine is a hole in the ground with a liar standing on top. A way to invest in precious metals is to own Franco-Nevada, which fundamentally provides financing to all kinds of companies. They've got investments in 14 countries around the world. And in return for the investment that they make, they get a stream of the metal that's produced by those mines. So it's very diversified cash flow stream that grows regularly. And it's not a lot of business risk to one particular asset.
Okay, since we're on a roll, I got one more for you, and it's in technology, which I appreciate that we're talking technology, because nobody wants to talk technology right now, because it's been rattled so much. But in less than a month, we're going to kick off earnings season again, and Netflix typically opens the door to some of the tech companies, if you want to see them as a tech company. Stock came down from its highs, but investors quickly started to pile back into Netflix. I assume just because they've got a moat around the future of entertainment factors into your thing. Like, why do you like Netflix?
Look, I'm going to go back to the cash flow.
Oh, okay.
Right? So the communications sector has had rising relative strength relative to the rest of the market for the last 12 months, and it continues to. And the two companies that sort of stand out are Meta and Netflix. It's really more communications, but they do have this ability to raise price. And we like assets that give us basically almost like a royalty. I mean, they get their monthly subscriptions, but from time to time they put their price up, it offsets inflation, and we think that's a great investment. They don't need finance.
Frustrates the user, but perhaps delights the